I just turned nearly $45,000 in real estate profit into a completely tax-free gain, all while using AI to help me with my bookkeeping. Now, before we dive in, let's get one thing straight. This isn't another one of those hypothetical or theoretical videos trying to get you to sign up for a master class. I'm not here to sell you a course. I'm here to show you my books. You're going to see my actual numbers and the exact process of how I prepare my own real estate business taxes. If you're a real estate investor, a small business owner, or a side hustler drowning in receipts, this is going to be for you. By the end of this, you'll know how to slash the time you spend massaging data using AI and how to use TurboTax to maximize every single deduction. Look, organizing expenses is the biggest headache for any property manager or investor. Tracking every repair, utility, and rent deposit used to take me hours of manual labor. But today, I'm showing you the lazy investor's secret weapon. I'm going to show you how I use Microsoft Copilot inside of Excel to automate my bookkeeping, protect my profits, and most importantly, get some of my time back. So here is my raw data of only two of my properties, organized by various categories and cost. In the past, you'd have to get pretty good at creating Excel pivot tables just to make sense of all of this. Now, I just tell Microsoft Copilot exactly what I want in plain English. I'm asking it to structure this into a hierarchy by property, then type, category, and subcategory. And watch this. The AI is actually reasoning through the data. It's even fixing any cells that cause errors on the fly. And just like that, a perfect CPA ready summary. Here are the gross profits. Property 1 brought in over $16,000. Property 2 brought in $7,000, making a total gross profit of around $19,887 across these two properties. Now let me show you how to enter all of this into TurboTax and why all this profit is tax-free for my business. Let's get to it. What we're seeing here is the portion of TurboTax where I am entering all my rental property information. As you see, we've got approximately 8 rows, and at the far right, we've got the net income for each one of those. This is after I've gone ahead and entered all the information that I'm about to walk through with you in one of these properties. And on my left side, I've got the breakdown for the property I'm going to be using, which is going to be the one that has a 7,324 gross profit, with all the breakdown values that you see here, ranging from operating expenses, revenue, loan payments, and capital expenditures. I'm going to go over to TurboTax and I'm going to select the property that corresponds to this one. And the first thing it's going to ask me is what type of rental property it is. It's a single family, and I will then be asked whether I sold it, converted it from a home to a rental, or rented part of my own home. None of these apply because this property is a full rental. So let's go ahead and click continue. Next up, it asked me if it was rented every single day in 2025, which it was, and it was also rented at a fair price similar to other properties in the area. So I select yes, it always was. I then get asked if I'm an active participant in it, and it tells you what are the two criteria to be able to consider one, which I am, since I manage it myself. And then it asks me if I made any of these type of payments. Even if you hire a contractor, the only time you're going to be making a payment to someone that requires a 1099 is when they are effectively a part-time employee that you hire, which I don't use. So we'll go ahead and select no for this and continue. And then I review these 3 uncommon situations and make sure that whether they apply to me or not. Now, this one does apply because this is one of the 2 properties that I own 50% off with a business partner that owns the other 50%. So I'm going to go ahead and select that option and click next. I then tell TurboTax what percent of ownership I have, and like I said, it's 50%. And what's nice about this is that TurboTax at this point will ask me if I want to enter the total amounts of all the revenues and costs and let the system calculate its own projection based on that 50% ownership, or if I want to go ahead and do my own math. There's no reason why I want to do my own math, so I'm going to select yes and continue. Then just comes a little bit of educational information that tells you the differences between expenses and assets. Goes into a little more detail around what are some types of expenses. You can see here taxes, premiums, repairs, cleaning and maintenance, mortgage interest, utilities, supplies, and even if you're using a business vehicle to get to and from your properties. And then it talks about what are types of assets. You've got the rental property itself, which is the building of that property. That depreciates over time, but other things like improvements, furnishings, and other assets can also be depreciated. And again, for expenses, you've got a lot of other things like taxes, management fees, professional and legal fees, advertising, commissions. We've already talked about travel and any other type of mortgage interest that you might have paid. So that's basically the breakdown. Pressing continue lets us now begin entering all this information. We're going to start with the revenue. In this particular rental year, we made $44,348. So we'll go ahead and enter that there. And you'll see it keeps that number at 44,000 at this view in the top. We're going to go ahead and skip the real estate taxes and the insurance premiums and the mortgage interest just because I don't have that handy just now. We'll bring that up here shortly. Instead, we're going to jump over to capture the repairs amount, which I do have here on the left. That came to around $800. After that, we're going to go ahead and enter the cleaning and maintenance costs, which on our left shows at approximately $1,800. And by the way, you're going to be noticing as we're entering these values, TurboTax is automatically applying that 50% contribution of my part of the business. So I just entered $1,800 for cleaning and maintenance, but we see that it's showing as $927. So it's already doing the math on my behalf, making my job a little easier. Okay, next up we've got utilities. For this year, we've got approximately $3,700 of utilities. So we'll enter that there. And we don't have any vehicle expense this year that I want to capture, nor any supplies. So we'll skip over that. And now we're going to pull up the form that I get from my bank that tells me how much interest I paid and what my taxes were. So I see the taxes over here. We're going to click there and enter the amount, which turned out to be approximately $4,700. And after that one, we're going to go over to the insurance premiums portion, and we're going to enter the value that we see here on the left, which looks to be approximately missing, which is strange. So I'll have to dig that up here later on in this video. So we'll skip through that and we'll get back to it. But what I do have is the mortgage interest. This amount is an eye-opening $22,000. That's because this property has a 30-year 7.8% interest rate. And yet it's still cash flowing for us. This is what's really great about buying properties with a high interest rate era. So much you pay towards mortgage interest that all of that is tax deductible at the end to reduce your taxable income, as you'll see here shortly. So we finished entering that there. Let's next jump over to the rental property. This is crucial because, like what I mentioned earlier, not just the property, but any improvement that you do for that property can also be depreciated upfront or over time every year. And that's what you see here. You're seeing things like appliances and furniture, cutting down trees, installing a French drain, installing a new closet in the basement, insulating the attic, and of course the property itself at the very bottom. All of these had an upfront cost, and in 2025, it shows you the amount that I can depreciate and deduct from my taxes based on that amount. The residential is what's key. It is the most significant at $11,000, and the way you calculate the number is you take the cost and divide it by 27.5 effectively, and that's going to give you essentially that number. I'm going to go ahead and say I'm done here and continue answering these next questions. I then get asked some more details around Section 179 carryovers for this particular assets. I'm not going to go deep into what this means, so I'm going to go for now and select no and continue through the rest of the process. Okay, now that we get to this part here, we're going to go over back to the insurance premiums, and I did finally find that form, and it turned out to be approximately the same at $1,700. So I'm going to go ahead and enter that in here. Normally, your mortgage provider is going to provide you with that information. I have to look into why mine didn't do it this time around. But to recap, folks, so off the bat at the top, we see revenue at $44,000. For me, my portion that I'm going to get that from that is half of that. So it's really $22,000. And at the bottom, we see all the expenses that we just entered. those already have that 50% allocation. And so really what TurboTax is going to do is it's going to take that revenue of 22,000 and subtract it by 17,347 and subtract the rest from based on what are the assets of the rental property that we depreciate every year. So from here, I'm going to click done, and we're going to go ahead and finish answering some of these other questions around QBI Safe Harbor and all the conditions that apply for it. Now, again, I'm not going to go into details of this, but for this particular business, I do want to associate it to one of my businesses that manages all my other properties in order to be able to apply for this. And you can see here right now, I've got two that are being associated to it, and I review all of these uncommon situations and continue and provided what is the business name that is operating all of these properties, and that's my business name there. And then I got to pull up my EIN, which is essentially my social security number for that business. And then I need to be able to justify some other information that we see here and make sure that I don't have another business that is providing services to my business, because then that also needs to be accounted for. So all of that gets pretty technical. We're not going to cover that in this video here. So what we see here at the end is essentially the final output after I finish entering this in. We can see at the very top, we've got a few properties that even after deductions and depreciation, it turned out that I actually made a taxable net income. Normally, I'd have to pay taxes on that amount, but because all my other properties, due to either the mortgage interest and all the expenses, ultimately came down to be a taxable negative loss to my business. And it offsets all of the actual taxable profits that I have here, making my total taxable income $0 on my real estate business. Now, I do want to provide some other tips here. When you do a refinance, you might need to enter two different lenders' mortgage interest amounts, which is what I'm showing here. In this particular property, I had Rocket Mortgage with a $900 interest that I paid to them. And then I had Lakeview, which I paid roughly around $9,800. And again, all of these properties, I do tell them that I want to combine it to my overarching business. And I need to describe why I'm combining a company with another one and what that relationship is. And essentially for my case, it's because one of my businesses is a subsidiary of another one of my companies. Okay, so essentially like we concluded earlier, all of those profits I had across a couple of those properties turned out to be a $0 1040 taxable income. And again, all that is thanks to the way that tax deductions and depreciations and amortizations work. So lastly, this view right here is the executive summary of my entire real estate business. Every row is a property and every column tells a different story, from revenue and utilities to the two most important numbers, unrealized gains and cash flow. Column G is my unrealized equity. That's money I'm building through loan paydowns that I will unlock when I refinance or sell that property. Column H, that's the real-time cash hitting my bank account. Now, you might see that $41,000 negative cash flow on row 8 and think I'm losing money, but I'm not. I invested roughly $20,000 to $25,000 for my current house hack project, where I rent out my finished in-law suite basement for $12,000 a year. Across all my properties, my true cash flow is roughly $28,000. And here is the best part. Thanks to depreciation and amortization, the IRS sees this $28,000 as tax-free income. That is the power of real estate. It's the ultimate gateway to long-term wealth. But I'm going to be very honest with you. It's incredibly difficult and slow-paced. If you look through my YouTube channel, you'll see the nightmares and the hard work it took to get here. It took me 8 years to build this 8-property portfolio. 5 of those properties being through house hacking. If you have aspirations to own even just one investment property, the strategies I share on this channel will be eye-opening. So hit that subscribe button to not miss out on my future guides around real estate, AI automation, and home do-it-yourself repairs, maintenance, and renovation projects that will save you a ton of money, regardless if you're a renter, a homeowner, or an investor. Check out the above playlist here to get started. And as always, folks, thanks so much for tuning in. And till next time.